oil. I had some great questions on this earlier on in the week as well, and we can see here a bit of analysis we were doing earlier on in our live trading room. Essentially, what oil did on the open is it gapped 5% on the Sunday open, quite a significant surge higher, came back up to the upper end of the trend channel, hit $55 per barrel. So you can see this is the gap on the open. Let's see if I can just break that down for you. 4-hour chart here. So this was the gap that we got. We got a gap and a surge up to $55 off the back of non-OPEC members agreeing a deal with OPEC members to limit production by approximately 500,000 barrels per day. And with that, we saw a big gap on the open on Sunday. This was the gap. Now, as is very common, the gap got filled. Even the previous weekend to that, we saw gold, silver, US dollar gap on the open, and those gaps got filled very quickly. It's very common for a gap to get filled like this. And that was a great shorting opportunity, actually, just in the short term. Take advantage of a bit of a blow off top here for oil. And it's obviously retraced since then. And we can see where it's just correcting at the moment. And it's pulled back from this big rejection candle. And right now, oil, it's decision time as well for oil. And I'll put it on a raw chart to really break it down for you in more detail here so you can see exactly what is happening. Okay, so if we go over to a weekly chart on oil needs a close above previous resistance here. It needs to close really above the 51 and 52 zone to maintain its upward trend in the short term here. If it closes above those levels, which was a very important level for oil to break out from, yes, then it has the potential for then previous resistance to become support, and we can look for the next move higher back up to $55 per barrel, and ultimately for a potential move back up to $66 a barrel, sorry, to 60, excuse me, US dollars per barrel. But the way oil is behaving at the moment, you can see where it's breaking down. It's given back most of the gains over the last week. If it cannot get a close above 51 to 52 zone, if it can't close above it and it has a further corrective pullback here, then we could be in for some more action to the downside. The bears could take short-term control of this market for oil. We could see a further corrective bounce, and I would look for moves back down to lower end of my trend channel, the 50% level. So if we just take into account the lows just prior to OPEC here, and we take into account the highs here, which we reached in the weeks after OPEC and a couple of weeks afterwards, you can see the 50% level at the moment is at $49 per barrel. And that could be a level to also pick up, certainly an event area. We'll see how oil holds if it gets as low as that point. At the moment, we can see oil, it's filled the gap off the open. And what I would look out for here on a closing basis today and also tomorrow as well, in order to regain a long position here and look for the next opportunity to go long, what I would look at is some sort of rejection candle forming around this zone. So if we get a hammer, if we get a bounce at this level here where we are at right now, I would look at that as an opportunity to re-enter for a long here. So it needs to develop some sort of rejection candle at this zone, produce a hammer, and then we could be up and running for the next leg higher. Previous resistance becomes support. So today is important for oil as well.